Welcome to this video post from Fields Capital Strategies. We are a financial planning and consulting group who base our strategies on two bedrock principles: guaranteed security and guaranteed growth for our clients and their money. In this presentation today, we will share with you the fundamentals of the private banking system and how this strategy can benefit your personal finances. Let's begin with the first of two financial principles we need to understand. Number one, you finance everything that you buy or spend your money on. You either pay interest to someone else or you give up interest you could have earned otherwise. Everyone falls into one of two categories. You're either a saver or a borrower. However, the truly wealthy are both. You see, the wealthy understand this financial principle here, that you finance everything, and they use this principle to their advantage. Let me see if I can illustrate this principle for you. What if I called you a zero? Would you take that as a compliment or a slight to your character? Well, to all of us but the wealthy, we are zeros. And what I mean by that, financially, we are working to zero. Let's look at the borrower. This is the person who must have it now. They see the new car and decide, I'm buying that now. So they run out to the bank and borrow the money to pay for the new car. Then they spend the next 4 to 5 years trying to get back to zero. But in 48 to 68 months, what have they done? They've gotten out of debt, but they need a new car. So what do? They repeat the process. They borrow the money and pay it back. They will do this for the rest of their lives unless they change their financial strategy. Then there are those who are savers. They are doing the same thing as the borrower, just in reverse. They decide to wait and save the money to buy that new car. So they save their money for 4 to 5 years and then pay cash for the car. But what have they done? They have depleted their savings and put themselves back at zero. And then when they need a new car in 4 to 5 more years, what do? They saved up, built up a savings, but they pay cash, back down to zero. And they're going to repeat this process. Save up, pay cash. Save up, pay cash. You see, paying cash is losing money. We can never recapture the money we pay cash for, or we can never get it back. Plus, we lose the opportunity to allow that money to grow and to earn interest. Then you've got those who are building wealth, and they fall into both categories. They are savers and borrowers. They save their money, but instead of paying cash, they use their savings as collateral to borrow the money to purchase the new car. And they allow their savings to continue growing, using the power of compounding to build wealth for themselves. Now, the strategy we want to talk about today and recommend to you to create wealth for you and your family is the private banking system or private banking strategy. This strategy leads us to the second financial principle we want to discuss, and that is someone is controlling the money in an economy. What banking is all about is someone or some organization has control over a pool of money, and that money must flow at a cost to meet a financial need. So ask yourself this: are you or the bank really in control of your money? Now, you can go to any town in America, and the nicest buildings, the most profitable businesses in town are the banks. Banks control the local pool of money and make large profits for their stockholders by keeping that money moving at a cost through the local economy. So, what is the business model for banks? How do they make money? How do they control the pool of money? The first thing banks need are depositors, savers, people who put their money in the bank for safekeeping. And in return, the bank agrees to pay interest or to provide services to the depositor, as well as give them their money back when they ask for it. Now, the bank has this pool of money from savers, and they need someone to flow this money to. That's where the borrower comes in. The bank loans money to the borrower and expects the borrower to pay the money back with interest. So, now we have this pool of money flowing from the depositor to the bank, to the borrower, back to the bank, and back to the depositor. And this cycle continues non-stop. Just watch at your local bank and see the people going in and out of that bank every day. That's the flow of money. And banks are making a profit every time that money moves. So, how do they profit on this flow of money? Well, let's assume as a saver we deposit $1,000 in the bank, and the bank pays us 1% interest on our money. That means that at the end of 1 year, we would have earned $10 on our deposit of $1,000. Now, the bank loans our $1,000 to a borrower at, say, 7%. The borrower will pay the bank back $1,000 in principal plus, say, $70 in interest. So, what is the bank's return on their investment? Is it 6%? The 7% from the borrower less the 1% paid to the depositor? Or maybe it's 60%. The $70 they made on the loan less the $10 they paid on the savings account? Well, try 600%. You see, the bank only invested $10 of their money in this transaction, and they made $60. That's 6 times what they invested. They used our money to make 600% on their money. Now that's a return on your investment. So, where is this profit from the flow of money going? In other words, who gets this profit? Well, it's not the depositor. It's the owners or shareholders of the bank. So, when we think about this banking model, let's apply it to our personal finances. Let us share with you now the private banking concept. And here's how it works. We help you create a banking system, a place, a vehicle for where you hold your pool of money. Now, few key components to that bank. It must earn a respectable rate of interest. It also must earn dividends on the profits from your bank. It must have tax favorability on the growth, the use or withdrawal of your money, and tax favorability when you pass your money on to your heirs. It also you must have complete access to your money, to be able to access it anytime you need it. And most importantly, your bank must be safe. It must be secure, and it must be guaranteed. So, once you have your banking vehicle or system established, just like a commercial bank, you need to create a pool of money. Fund your bank. So, where does this money come from for your bank's deposits? It comes from you. You find it in your savings. Maybe some investments that you hold. Maybe you sold some property or received an inheritance from a long-lost aunt. Or maybe just through your personal budgeting process, you start saving more money and putting it into your bank to capitalize your bank, to create your pool of money. Now, this may take some time. It may take 2, 3, 4 years. But once you have saved and accumulated a pool of money, you start allowing that money to flow. And you do that by becoming the borrower. You loan yourself money from your bank for a new car, for a vacation you want to take, maybe braces for the kids or to remodel the house. Maybe you've got a child in college or a daughter about to be married. Whatever your need is, you loan yourself the money, you use your money from your bank, and then you expect yourself to pay it back. Because as a responsible banker, that's what you would do. You would loan someone money and expect them to pay the money back with interest. Well, you do the same thing to yourself. So, if you're taking these loans and paying them back with interest, what type of interest do you charge yourself? I say 10%. Now you're saying, what? Why would I do that? I can go to the bank down the street and get the money at 5%. Well, let me ask you this. Do you own the bank down the street? You see, as you pay yourself back at 10%, who is that interest going to? It's going to you. You're building profit. You're building capital in your private banking system. You're growing your pool of money. Now, this private banking system involves a paradigm shift, a change in thinking, a change in mindset for how you handle your money. You see, you're not just a saver or a borrower. Now, you're a banker. And as your own banker, the loan process, it's very simple. There's no credit checks unless, of course, you can't trust yourself to pay the money back, then maybe so. But the process is simple. When you need money, you go to your banker, who is you, and loan yourself the money. So, as your private bank begins to grow and your pool of money is flowing, the profit or dividends from your banking business, they don't go to the stockholders anymore. They go back to you. And one other feature to this. Now, as the president of Bank for You, and let's say because you've done such a good job managing and structuring and growing your bank, when the time comes, there is a built-in private pension plan to this system. You can receive retirement income for life. And this retirement income can be tax-free. That's right, a tax-free retirement income for life. So, to summarize the private banking system, you become a saver. You put your money, your savings, into a system, a properly structured system that's going to allow your money to continue to grow, to continue to compound uninterrupted. But the key to this feature is, as the saver, then you still have access to your money by loaning yourself monies from your private bank, while at the same time your savings, they continue to grow uninterrupted. So you have the savings and compounding effect on your money, but use of your money at the same time. And then the beauty of this system is when the time comes and you're ready to retire, you turn on the private pension plan, that aspect of this system. So that's what makes the private banking system so wonderful to me. You're able to save your money and let it continue growing, but you're also able to use that money for the needs you have at the same time. Now, let's remind ourselves of the two fundamental principles we've talked about. Number one, we finance every dollar we spend. We either pay interest to someone else as a borrower, or we lose the opportunity to earn interest by paying cash as a saver. And then principle number two, realizing who is in control of the flow of money in our personal economy. Those who are building personal wealth, they understand these concepts, and they're taking control of their own money. Now, if you want to know more how to properly structure your private banking system to allow your money to grow uninterrupted while at the same time you have access and use of your money, and then how to turn that system into a private pension plan when the time comes, contact us at Fields Capital Strategies and let us discuss with you how to properly structure your private banking system. Thank you for watching this video post. Please subscribe to this channel, comment on our post, share this video on your channel or maybe your Facebook page. Follow the link below to our Facebook page for more information. We hope to see you next time here on Fields Capital Strategies.